Next up is with Goldman Sachs. Goldman Sachs is officially the first major US bank to begin trading cryptocurrency, and just the other day, they announced that they are having a new partnership with Mike Novogratz, his company Galaxy Digital, which is the crypto merchant bank. They are working with them, and that now Goldman Sachs has officially begun trading cryptocurrency. It's essentially giving other banks the go-ahead to say, look, we're doing it. You guys got to get in right now. You better get in, and it's okay if other banks get in, because what happens most of the time, according to analysts, according to just history in general, what happens is generally what we see is when one bank gets in, one bank starts to do something, then we see all the other major banks get in as well. None of them like to be the first. A lot of times they're a little slower to being the first, but once one bank is out there doing something, the other banks have fear of missing out, FOMO, they'll get on board because clients are asking for it. They don't want clients to leave their bank for another bank. So we always see this happen, whether it's with some sort of investment products like crypto, whether it's with stocks, whatever it's with. If there's something out there that people can't invest in, that the company isn't investing in, well, they might lose some customers to competition, and no bank is going to want to do that. So it's exciting to see that Goldman Sachs is finally doing this. But interesting thing here, which I found pretty crazy, is that Goldman Sachs is constantly flip-flopping their mind, changing their mind about what they want to do with crypto. One day we see them write a report. The report said that basically Bitcoin is not a long-term store of value. It's not even an investable asset class, and they want nothing to do with it. They want nothing to do with it. It says digital assets. This is a report from them. Digital assets, beauty is not in the eye of the beholder. They go around talking about but Bitcoin shouldn't really be part of portfolios. Yet now they're talking about investing in crypto. They've officially, partnered with Galaxy Digital to invest in crypto. So it's just interesting to see that we see major banks, major institutions on the one hand say that they want nothing to do with Bitcoin. Then the next day they say we're investing in it. So is it that they're just internally divided on what should be the next steps with crypto and digital assets? That's very possible. Is it that they're trying to manipulate the market and they're trying to spread fear when they say we're not investing? Then later people figure out, well, they actually did invest. That's a possibility too, because we do see that happen quite a bit. But either way, what we do know is that Goldman Sachs does have this partnership. They are starting to trade crypto. We will start to see more banks trading crypto very soon as well. And even if they're saying they're not going to or they don't like it, they're doing it. So anytime now that you see reports coming out from Goldman Sachs speaking badly about Bitcoin, saying that they don't think it's an investable asset class, just keep in the back of your mind that they are putting money into it. They're putting money into it, and even if they don't think it's long-term, well, you know what? Actions speak louder than words. Their actions are showing that they at least believe in it short-term, because otherwise they wouldn't be putting money into it. But it's interesting to see this major partnership happen. We're probably gonna see more banks coming into the crypto world very, very soon. And this will be when we start to see crypto go from that $1.5 trillion market cap to $3, $4, $5 trillion market cap. Because what we need in order for that to happen is institutions start to pour their money in. Yes, retail investors are very excited about crypto. We see, a decent percentage of investors in the US have money and exposure to crypto. But where we're going to really start to see these gains is when we start to see hedge funds, investment banks, and other major companies start to pour money into crypto. Right now, the percentage is very small, but over time, according to a recent report done by hedge funds, they said that on average, they're expecting to have about 7% exposure of their portfolios into crypto. We're nowhere near that. That's over the next 5 years. But now that we're seeing Goldman Sachs, we're going to see other investment banks, we're going to see other hedge funds start to do this. This is why I don't try and time the market. This is why I don't try and time the market, because it's like we don't know when institutions are going to get in. We hear about the announcement after the fact. We hear, Tesla bought $1 billion worth of Bitcoin. Oh, Square bought Bitcoin. Oh, Goldman Sachs is starting to trade. But we hear that after the fact. And I want to be in before these major announcements come out, before any major news comes out. And the best way to do that is just to, put money in that you don't really care about losing short-term, just long-term investment, and just keep it in a couple of projects that you're excited about. So that's what I do, because I want to be in when we start to see major institutions pour, billions, hundreds of billions of dollars into all of these projects.